Oh, yeah, jump into topics, man.
Jump into
That's what we're
topic.
talking about.
Oh my gosh, some crazy topics have come about. Especially, I mean, rates are starting to come down a little bit.
Oh, yeah. So rates are coming down. That's kind of cool. I think we're seeing a little bit of movement up and down slightly here and there. But yeah, overall rates have come down a little bit. I don't know what that actually pans out to, though, right? Because rates are down. People are applying for whatever they're applying for. And at the same time, credit availability is decreasing. So you're going out there, you're applying for something, and you can't qualify for it because the credit availability or the credit box is tightening, right? And so,
Oh, before you go on in there,
yeah,
back up real quick. What is credit availability?
credit availability just it's for take it as it is, right? It's the availability of credit for customers that are looking for or to borrow money.
Okay. So basically, like what the lending appetite is for banks, like type thing there.
Yeah, I mean that's exactly the way I would explain it to like a customer. How much risk or appetite does the bank have, risk aversion, whatever it is, does the bank have to want to take on new debt, and how loose or tight are they going to be with the guidelines to extend that credit to someone?
The reason I ask is because obviously for our viewers, we want to make sure that they're understanding and they're getting everything there. But yes, you're right. Credit availability is the lowest since 2012.
Yeah, credit availability. Wow, that's a
real article. Yeah,
I read something today.
I did.
I like that.
So yeah, credit availability is the lowest since 2012. What does that mean, man? What does that mean for people?
So let's go back to that application thing, right? So applications are up a lot, rates are down.
10%.
Yeah, applications are up 10%, rates are down, and people are coming back to the market thinking, hey, I want to go buy that house. But at the same time, the credit availability is just not there. And so people are not qualifying for what they want to qualify for. And
so talk to me real quick.
Really not going to move anything ahead, not in a meaningful way. Now, it doesn't mean that, there aren't more loans right now. People are doing more loans,
We definitely are.
Yeah.
So what is it? So explain to me, man. You come from your background. Well, you've also been in the secondary market, right? You've worked in the secondary market, or no?
So I've worked with some secondary guys, and then on the secondary side of the fence for about a year and a half, a long time ago. I was still like an hourly employee back then, but yeah.
But you have experience in that area, and you're pretty familiar because you have a lot of buddies in that area as well, too, right? Yeah. So for somebody who has some sort of experience there and somebody who's kind of understanding, okay, let me rephrase. Aren't lower interest rates generally mean that you could qualify easier? Why is credit availability going down if rates are going down as well?
So rates going up or down isn't going to dictate why credit guidelines are loosening or tightening.
Okay.
That's going to be a whole different metric somewhere else, right? So somewhere else, the bank or the lender or the whoever controls the money is sitting there saying, we have created these guidelines, and these are the guidelines we want to have loans fit into. And that's where your loan product comes from. Your interest rate is set by a whole different set of criteria, and that can move up and down depending upon all of
no correlation.
There's going to be correlation. It's just not, it's not the same thing, right? You're not looking at one or the other going, if rates drop, then credit availability has to tighten. That's not always the case. As we saw a couple of years ago, rates dropped and credit availability was at a high point. Look at how many people bought or refinanced into an interest rate of 2.9, 3, whatever it was.
That's why I'm asking, because I mean, to my mind, I don't have the experience that you have. I'm thinking low rates come lower, people can qualify for more. I'm sure that's what everybody's thinking.
Well, yeah. So, 3 years ago, that proved to be true, right? So that's why I say one doesn't correlate with the other. One doesn't move with the other just because rates go down, it's not going to get easier. Right now, we're in a marketplace where credit availability is down, rates are down. You would think, hey, I could do more loans, but it's not necessarily true because maybe your borrower's credit profile just doesn't fit in this bucket right now.
Oh, I like that. So, wow. So even though rates are down does not mean that you're going to have more qualified buyers. So let's snowball this. What does that mean for For side note, real quick, I actually saw a video where the guy was like skiing and he fell. And dude, there was a guy that was snowboarding, and the guy's snowboarding. The only reason he found him because his feet were up in the air out of the snow, and the guy was inside the snow, so he had to save him. It's crazy stuff. I don't know why I was